And Will Call at Insight Mortgage Solutions. Thank you so much for taking a few minutes to watch this video. It's very important that we get a good understanding of what mortgage occupancy fraud is and how to avoid it, why it's a big deal, and why you don't want to get caught in the middle of it. It's a topic that comes up every couple of months, it seems like, where somebody is coming, they want to get a mortgage on a house they want to buy. A lot of times it's when they already own a house and they want to buy another one. And they'll say, well, the house I want to buy, it's going to be my new primary residence. And when we look at the big picture, we can tell it's probably not going to be their primary residence. It's probably going to be a rental property, and and they just want to call it a primary residence because they're going to get a lower rate by doing that than if they called it an investment property or a rental property or a second home. And so the reason it's a big deal is because it truly is fraudulent to do that. It's a prosecutable crime, and it's something that Fannie Mae, Freddie Mac, all the investors providing mortgage money, they do not take it lightly. And so, what we look at is the whole picture. We want to see the house that you currently own. What is your plan for that house? Are you going to keep it, rent it out? Are you going to sell it? Is the house that you're buying that you're going to call your primary residence? Is it smaller than the house you own already? Is it in a neighborhood that's maybe not as nice as the one that you live in right now? These are all things that an underwriter looks at, and a good loan officer is going to look at to see, does it really make sense? And if we sniff that out while we're doing the loan before we close escrow, we're going to come back and say, you know what? It just doesn't look like it's going to be a primary residence. Can you help me understand how this is going to be a primary residence? Because you're coming from a house that really looks like it'd be a better one for your to be your primary residence. So help me understand it. And sometimes there's a good case for it being a primary residence, and it's going to take a really good, strong letter of explanation that we're going to need to provide to the underwriter to help the underwriter understand why this is going to be a primary residence. But if it in fact is not going to be a primary residence, then we need to know that. If we feel like it's really not going to be, and all the signs are telling us that it's not going to be, then we are going to come back and say, you know what, I hear your explanation, but honestly, nobody's going to be buying that. And so we need to treat it as an investment property. Yes, you're going to have a little bit higher interest rate to do that, but you can still get the loan. You can still get the mortgage. You can still get the house. And it will keep you from potential prison time. It will keep you from potential monetary fines that are huge, thousands and thousands of dollars. And it will also protect everybody who was involved with that loan. Because when there's something like this that takes place, not only is the borrower subject to prosecution, so is the loan officer. If the loan officer knew about it and they went ahead went along with it anyway and kind of pulled the wool over everybody's eyes, that loan officer is going to lose their license. They're going to end up going before a court and having it decided what the penalty is going to be. The underwriter that was involved, whether they knew about it or not, but maybe they should have asked more questions and they should have noticed it, they could lose their job. They might not be able to ever underwrite again. Loan officer that loses their job, they would have a tough time getting a job somewhere else as well. So this is a big, big, big deal. And you would have thought that all of the fraud kind of disappeared in 2008, 2009 when everything crashed, because there was a lot of fraud that was taking place during that time as well. The reality is the fraud that's taking place today is on a larger scale than it was back then. And a lot of it has to do with technology advances and making it easier to commit different types of fraud. There are other types, not just occupancy. People come up with fraudulent documents for income, for their assets. They look legit, but they're not. And so what happens? Let's say that somebody does make it all the way through underwriting, through closing, and it's not really going to be their primary residence. After closing, lenders do these audits of the files. And when they're auditing these files, if they see something that's throwing up red flags that should have thrown up red flags during the process, then they're going to flag that loan, set it aside. They're going to start digging. And they're going to dig and dig until they get the answers that they feel like they should be getting, or confirmation that, yeah, it really is a primary residence. But if all these red flags are thrown up, the lender is then going to be stuck with that loan. They won't be able to sell that loan to Fannie Mae or Freddie Mac. And they're going to come back to the loan officer's company that did the loan and say, hey, we can't sell the loan. You have to buy this loan back. And honestly, that's enough to bankrupt companies if that happens. If it's a small company, like a small brokerage, and it is not a fun thing to have to face. And it could also trigger lawsuits that are going to take place. So when we're asking questions, there's a reason some of the questions that we're asking at the time of loan application, during the processing of a loan, because we need to kind of go through our discovery mode and see, is everything, dotting the I's and crossing the T's to avoid anything that could potentially be fraud. And so we are also careful to, ask the questions in a way where we're not just incriminating somebody, because maybe it's legit going to be a primary residence. Now, are there times where it could be a primary residence and you're not occupying it as a primary residence? Yes, there are times where that could actually be the case. And so, but they are very limited. There are some exceptions. The main exceptions are if it's a parent or a legal guardian that wants to provide housing for their handicapped or disabled adult child. The adult child is unable to earn a sufficient income to be able to buy a house or qualify for a house on their own. So the parent or legal guardian, they can buy a house for that adult child, call it a primary residence for the parent or legal guardian, and be able to get the primary residence interest rates and underwriting guidelines that will be associated with that, instead of it being investment property. So that's one instance. The other is just the flip of that. If you have a child that wants to provide housing for the parents don't have sufficient income to qualify for a house on their own. And so the child wants to buy a house for their parents. Yes, that can be considered a primary residence. And there are a couple of documents that we have to get, just so that, we did our due diligence. We can show that to the underwriter and to whoever is going to be servicing that loan, that it's obvious that this is the case. But other than that, if you're not occupying it as your true primary residence and you have no intention of that, it's not a primary residence. And a smart lender will say no, even if it means losing that customer and that customer goes somewhere else. I'm good with that, because it keeps me out of any kind of hot water that I want to get into. So keep that in mind. Be honest on the applications. Make sure you tell your loan officer everything, because it's the loan officer's job to make sure they're structuring the loan in a way that it's a saleable loan. Once the loan closes, it can be sold to the investors, and also making sure that nobody is stepping into a gray or a true black and white scenario where nobody really wants to go. So if you have any questions about that, please don't hesitate to reach out to me. I'm at 916-203-6901. Always easy to reach. And hope this makes sense to you. If you have more questions about it, call me, email me, and we will go over that. And hope you guys have a great day.